Last Thursday, Kenya Airways announced its biggest pre-tax loss yet of close to 30 billion shillings. Among the reasons provided by the airline's management to explain the record-breaking loss was a decline in its passenger revenues that was blamed on the impact of travel advisories on Kenya, as well as the Ebola outbreak in West Africa. Losses arising from the purchase of fuel at prices higher than the prevailing market price also ate into KQ's bottom line. Also on the list of reasons why KQ plunged deeper into loss-making territory is its huge level of indebtedness, caused in part by the high cost of borrowing it has had to incur to buy and operate its new fleet of planes.
If you look at KQ's balance sheet today, I can say it's 100% debt, because basically the equity structure is negative. I think negative 6 billion. So technically, KQ is insolvent. There's no equity in it.
With its capital depleted, the national carrier was forced to look for short-term financing to the tune of 20 billion shillings to enable it stay afloat. This as it sells assets it considers to be idle to raise additional cash.
We already started to lay the foundation. Those foundations have been laid. Financing was the first thing we wanted to do to make sure that we could be on sound footing in order to prepare for the long-term financing.
Debate has been raging as to what amount of money KQ requires to get back on a sound financial footing, with figures ranging from 50 billion shillings to well over 100 billion shillings being floated. The question, though, is where will that money come from? From the look of things, KQ may have to look to its shareholders, who include the Government of Kenya, Air France KLM, and the International Finance Corporation, for cheaper yet long-term financing. But still, getting a bailout from the government, which is KQ's largest shareholder, will not be easy.
So getting in capital from the government may take longer. It could be possible, but it will take longer, because now they need to go through Parliament for them to get the capital coming in.
And according to aviation industry experts, Kenya Airways may also have to shop for a strategic investor to partner with, both for financial and commercial support. And here, Middle Eastern carriers hungry for more business within Africa appear to be KQ's best bet. While it remains to be seen whether this is an option to be pursued, what is clear is that there will be no easy options for Kenya's flag carrier as it navigates out of its current turbulence. Stephen Kimani, Citizen Business Center.